Hey everyone, Amber Johnson, Pillar Real Estate, back with another Q&A for you. So today I have one of my friends and one of my favorite loan partners to work with, Lauryn Francisco with Central Coast Lending. Lauryn, thank you for joining me today.
Absolutely.
So one of the reasons Lauryn and I work so well together is that we are both wildly passionate about our veterans and giving back however we can. So one of the ways that we do that is through using our businesses as a platform for education on the VA loan. The VA loan is an amazing benefit available to our service members, and unfortunately it's gained a bad rap in a few specific ways and for no good reason. So I brought Lauryn in today to identify some of the most common myths surrounding the VA loan that can be seen, felt, heard through the general public, even real estate and mortgage professionals, and sadly, even our veterans. So let's jump right into a couple of myths. Let's start with VA appraisals. What is the myth or myths surrounding VA appraisals, and what is the actual reality?
A huge one that I hear all the time is the VA appraisal isn't going to appraise as high as a conventional loan, which, it may have been some truth to that in the distant past, but if we look at the stats from 2020 and 2021, VA appraisals actually came in higher than conventional more often. So the stats are amazing on that, which is great. Also, if they do come in low, there are a couple of ways to get the value adjusted that are very specific to the VA loan. So, and a lot of agents, a lot of lenders actually don't even know about them, which is part of the scary thing and part of the reason that these transactions do get a bad rap, because you have people doing them that don't know what they're doing and don't have the education. So there's Tidewater that happens before the appraisal value is given. So if an appraiser is looking at a contract price and they're looking at what their numbers are and they're not matching, the appraiser will reach out to help. They'll invoke Tidewater and they will reach out to the lender to me for help. And in turn, I will reach out to the agents for help and say, hey, the appraiser wants to know, is there anything else he's not looking at? Anything else he can consider, any other comps? And that gives, about 48 hours opportunity to help him or her take a look at that. If that still doesn't work and it still comes in low, there is a lesser known process called reconsideration of value, ROV. And that's something that the lender will initiate with the veteran direct to the VA. And we will also include a reasoning about why we think the value should be higher and additional comps and all sorts of different factors. Those can take, a week or two to get reviewed, depending on how slow or fast the VA is at the time. But last I heard, about 85% of ROVs that were submitted had a change and increase in value.
Wow.
Now, not necessarily to the contract price, but a certain amount, which is anything helps in those situations, especially with the market still being high. So that's the value side. And then of course we get a lot of questions about, minimum property requirements. Well, is this house going to pass VA appraisal? I'm sure you've heard that before, right, Amber?
Yes.
Yeah. So VA houses do need to be in good shape, because the VA wants the veteran to not move into a dump, is essentially the reasoning behind it.
Thank you.
It makes sense, right? So, if you're a listing agent and you're out there and you see there's some peeling paint or there's a missing handrail or something wrong with it, get a bucket of paint, some sandpaper and fix it. I preach that all day long, take a little bit of the extra work, and you're gonna want that for your pictures anyways, right? Yep. Anything that gets called out on the appraisal needs to be fixed prior to closing. But what a lot of people don't know is that you can apply for a waiver, an MPR waiver through the VA. Now, that's not just because you don't want to do the work. It's because, there's an issue with materials or timing or weather, or once in a while we get an appraiser who gives a funky, they put a condition on for a fence that needs to be revarnished. Well, the outbuildings, extra fences, things like that do not, in VA guidelines, they do not need to meet minimum property requirements. So you can ask for a waiver for that.
Okay, got it.
I can talk on that for a while, but carry on.
Okay, so number 2, VA underwriting. Let's just throw out a hypothetical situation that I'm sure is going on as we speak. So let's say a listing agent is reviewing 5 offers with their seller, one of which is a VA loan. What might a misguided or miseducated listing agent be telling their seller about the underwriting process with a VA loan that might hinder that VA buyer's offer from being accepted?
Yeah, and there's a few. One of the big ones we hear is, that kind of boils my blood, is, they're coming in with zero money down. They don't have any skin in the game. Like, well, first of all, I mean, they served our country, so they probably have much more skin than all of the rest of us who did, right? But you know, that part aside, and just looking at the numbers, and again, looking at the stats, most veterans have more money available than like FHA buyers, even than some conventional buyers. So just because they're using their earned benefit of 0% down does not mean that they don't have money in the bank.
Right.
Maybe they're just choosing to use it more wisely. Maybe they can qualify and are okay with the payment with 0 down, but they're going to use it for an emergency fund. So they don't go into debt if they need to fix something, or for repairs or remodeling on the house, or moving expenses. So one of the things I do on my pre-approval letters when I'm working with a veteran is I'll put in there, with the veteran's permission, of course, this is how much they have in reserve funds. Like, just because they're not using the money doesn't mean that they don't have any. They actually, it makes them, in my case, it makes them a stronger buyer. I would rather, as a lender, lend to someone who has keeping more money in the bank than who's spending all their money on their documents, which is something we see a lot with FHA buyers, and some like 3 to 5% down conventional buyers. I've definitely seen that.
Yes.
So that's a big one. We hear sometimes like OVA loans are less likely to close than conventional. If you look at the VA handbook for underwriting guidelines and you look at the conventional handbook for underwriting guidelines, the VA is a lot thinner than the conventional one, right? So, and the reason that is that the VA on purpose leaves some vague areas and some gray areas in their guidelines, and then they give lenders and underwriters the discretion to make a decision in favor of the veteran. So where it gets bad is, again, you have a VA underwriter who doesn't work with VA very much or doesn't know what they're doing, and then they kind of err on the side of caution, or they misinterpret these guidelines. The VA wants to make loans. The VA lenders want to make loans as well, because the VA guarantees a certain percentage of the loan.
Right.
So you get a good team and your lending staff who knows what they're doing, and they're looking for reasons to close the loan, not to not close that loan. And that's why it's so important to work with someone who does know how to interpret the guidelines.
Yes. 100%. Okay, so what are a few things that somebody may not know about a VA loan?
Well, there are some fun and interesting facts that we can go over. VA is not FHA, it's not conventional. There's very little crossover, much less crossover with FHA and conventional than most people realize. For one, do you know what the minimum credit score is that the VA requires? Pop quiz.
Oh, shoot. Let's say 520.
So actually the VA does not have a minimum credit score. Investors have minimum credit scores. So the VA says, like, if it makes sense, make the loan. And some investors will say, like, hey, you have to have a certain number. So most of the time we see like 580 is kind of a good rule of thumb. There are some that will go lower to 550, 520, but then they add so many other overlays and extra guidelines and things that they kind of but not necessarily. So that's kind of a fun one. So the bottom line on that is you can get different answers depending on the lender that you talk to. The VA does not have a requirement for credit scores, but lenders will have different levels.
That is very good.
If you get qualified with someone, call someone else and ask those questions.
Okay.
Let's see. Another one is gift funds. So on FHA, it's pretty strict on gift funds. It has to be like a direct relative. Conventional, it's kind of any relative. VA, it can be anybody who's not involved with the transaction. So Amber, if you have a buyer, you don't want to give them gift funds, but anybody else, if they have a friend or a colleague or a coworker who will give them money towards closing costs, that's acceptable. Also, VA is the only loan type where the veteran can borrow money to pay their closing costs. No other loan type allows that. Not that we'd necessarily recommend this, but a veteran could put closing costs on their credit card. So that's kind of mind-blowing, because like nothing else is. Now, obviously we factor that into the debt to income, but the higher payment, it would be on the credit card, but you know, that's just kind of a fun fact. Let's see, what else? Do you have any thoughts or questions on VA
So
loans,
with the gift funds, do they have to just write a letter to source it, or is that the only requirement?
Yeah, so similar sourcing, we just would get a gift letter and a copy of their bank statement, and then the friend or whomever could just wire the money to escrow. So it does have to be sourced money. It can't be cash. Right. As usual, but that's a fun one that most people don't know.
And then for qualifying to be able to obtain a VA loan, is there a minimum number of time that somebody has to serve?
Yes, but it's not a blanket. It's not, it depends on if you're reserves, if you're active duty, if you're deployed. I mean, there's a lot of, so one thing that we do at every single pre-approval for a veteran is one of the first things I do is I pull their certificate of eligibility from the VA, and that says if they're eligible or not, and if they have a funding or not. A lot of lenders, especially some of the big box lenders that spend a lot of money on marketing that you may have heard of, they generally won't pull the certificate of eligibility until like you're in escrow, you're in underwriting, and then boom, you pull the COE and it's like, oh, maybe they had a foreclosure, or maybe they have another house they didn't tell you about, or there's some of your entitlement is tied up and now maybe they have to bring in a down payment. So that can, I've seen that blow up escrows. I've gotten plenty of rescue loans like that. So if you're an agent and you're working with a VA buyer, one of the first questions I want you to ask them is, do you have your certificate of eligibility? And if you have access to their lender, you ask that question to the lender. And if the lender goes, that's a bad sign.
Yes,
right?
definitely.
So that one. Also, residual income is interesting. I won't spend a ton of time on it, but you're all probably familiar with debt to income. So this is like your gross income versus your monthly debts and your new mortgage payment. VA does not have a hard to set guideline on debt to income. I've had debt to income up at like 80% approved. Not that always makes sense, but sometimes there's reasons why.
Yep.
The hard and fast rule on VA is residual income. So that's more on it like household expenses. It's a completely different calculation than DTI. And again, that needs to be calculated at pre-approval. I've had loans that should be fine on the debt to income, not pass residual, and it'll be a decline. So it's another question to ask. The buyer, the veteran won't necessarily know what that is, but the lender would. If you're ever working with the lender and they give you the deer in the headlights when you talk about residual income, that's something that has to be done at pre-approval, not during escrow. Otherwise, putting deposit at risk.
Right.
So I get lots of questions about pest inspections and termite clearance. Anyone can pay for the pest inspection. Doesn't have to be the seller. That changed a few years ago. It's still a common misconception. Anyone can pay, or I should say the vet can pay for the Section 1 clearance, not just the seller.
Okay. So I did want to also touch on Homes for Heroes before we go. So another way Lauryn and I intersect our passion for veteran homeownership with our businesses is through Homes for Heroes. If you follow her or I in any capacity, you might be familiar with it already. But in a nutshell, Homes for Heroes is a nationwide program that was started after 9/11, and we give back to our hero clients when they buy, sell, or refi with us. So on the loan side, Lauryn, is it still a credit for the appraisal?
Yes, which is up to $750 these days.
Okay. So $750 credit. And then on the real estate agent side, I donate a portion of the earnings on the transaction back to the hero at closing. So it's a check written out directly to the hero from Homes for Heroes. So it can be used for anything, paying off debt, savings, trip, renovations, whatever the hero would like. The amount is based on the purchase price of the home. So of course it's going to vary, but on average, our clients here in SLO County get back between $4,000 and $5,000. So between the two of us, pretty substantial savings there. So before you buy, sell, or refi, I would highly recommend checking out the Homes for Heroes program. There's a page dedicated to it on my website, pillarrealestate.com. There's some general info there, and then you can also sign up as a hero. And then, maybe 30 seconds, just very basic info, and then you get routed to Lauryn and I, and we take it from there.
It's a great program. It's really good advocacy.
Yes, I would say probably 25-30% of my business is through Homes for Heroes now. So it's been a wonderful way to give back, and of course we get to work together. So so Lauryn, if any of the viewers have a question about the VA loan or the process in general, what is the best way for them to reach you?
So all my contact info is on my website, valendergirllauren.com. Lauryn's Lauryn. Find me a Lender Girl Lauryn on Facebook, on Instagram. All my contact info is on there. I'd be happy to help answer any questions.
Perfect. Thank you for joining me today, Lauryn, and thank you guys for watching. We will see you on the next one.
Thank you.